All right, ladies and gentlemen, welcome to the podcast. As you can probably tell from the sound of my voice, I am super pumped about our guest today. He is indeed a big wig in financial services, a leader, one of the biggest pioneers in our profession. I am talking about none other than the incredible Jonathan Gunby, who is the CEO of Transact. Jonathan, welcome to the podcast.
Thank you very much for having me on the show.
I know you're a busy man, and I've had to wait months to make this happen. So I really truly appreciate your time. For the purpose of our audience, anyone who's been living under a rock for the past decade or so, I believe you're one of the founding teams at Transact and all that stuff. So many people in the industry know who you are. You're a known quantity. But for the younger ones who are coming up, tell us a little bit about yourself, the journey that led you to the profession, and give us a sense of your day-to-day job today.
Yeah, sure. Oh, yeah, I've been in the profession a long while, and I was very lucky because, I joined a company called Sun Alliance as a graduate trainee, and it was great training, and I really enjoyed it, and I genuinely fell in love with the industry. So I've worked in the industry ever since then. So a mixture really of provider side, so investment companies, life companies, for the first period of my career, and then I moved into financial services consulting for quite a while. I thought I'd do it for a few years, and ended up doing it for over 15 years. And that was largely, Abraham, because there was a lot of opportunities to do overseas work with multinationals. So I was really lucky and privileged to work in America, Australia, South Africa, Southeast Asia. And the great thing about that was you really get to experience what works well and what doesn't work so well. All sorts of distribution models, all sorts of product strategies, whether that's platforms or otherwise. So you build this wealth of experience. So I felt, 15 years felt like 150 years of experience. So that I did that, and then I actually flying around the world is great fun, but eventually you get a bit tired of it. So I joined Transact in 2011. I knew Ian and Mike, the founders, and I'd actually worked with Ian many years ago at Royal Life Fund Management. So we've been mates for a long while. Yeah. So when those guys, they'd proven their business model by 2011, but wanted to scale it. So I joined. There's about 8 billion on the platform at that time, and the core was in place, but it needed, the infrastructure created in order to scale the business.
Incredible stuff. So you joined. I mean, when I met you, you were the chief technical officer, something to that effect. When you was that how you came into the business?
Yeah.
And then
yes.
you transitioned.
Yes, no, that's right. So I basically, when I first joined, I looked after sales, marketing, strategy, but also the project office. And that included the business analysts that specified the system requirements. And then I joined the board a few years later and had the joys of an IPO, Abraham, doing all the work for the IPO. And I was on the board. And then when Ian decided he wanted to retire, we planned it quite a few years ahead. So I moved into the CEO role.
Incredible stuff. So you're CEO of Transact, but of course there is the parent company Integrafin with a separate CEO. Talk to us a little bit about the dynamics there. What advisors might think, or I might think, from an ignorant point of view, why do you need a separate CEO to manage, the actual platform than the parent co?
Yeah. So I also sit on the parent co as well,
Right.
on that board, the listed entity. And the reason we've structured it the way we have is we sit lots of the subsidiary companies under the holding company. So we have the Time for Advice business, for example. We have the technology company that we own in Australia, and the two insurance companies, the Isle of Man company, the UK company, and we sit all of those under the holding company and do it that way. The holding company itself is not regulated,
Right.
so it's convenient to do it that way rather than sit everything under a regulated company itself.
Thank you.
For it's practical reasons. So it has capital advantages, and it has some practical advantage when you're moving capital and cash around a business. With a regulated entity, you actually have to get approval for any movements, so it can be quite a drawn out process. So it's easier to have it all sitting under the top co.
Right, understood. And so you're CEO of Transact business, and am I correct in thinking that the other subsidiaries, so the life companies that provide, the offshore and onshore bond, for instance, do they have separate managing directors, or are you overseeing those as well?
So each of the companies has a board with an MD, and they all have their own audit and risk committees, and all have their own non-executives.
Right. Okay.
And that's, to me, obviously. So IFAL Transact is regulated by the FCA. The UK life company is also authorised by the PRA.
Huh.
And then the Isle of Man company is obviously authorised by the FSA in the Isle of Man. So there's quite a lot of requirements to meet.
Wow, it's people see these as I see these as a great company, a single company, but there is a lot going on under the bonnet. So thank you for shining the spotlight on that. Now, this is kind of, call it a slight digression. You obviously worked with the legendary Ian Taylor, who a pioneer in our industry, and a force of nature, and sadly passed away last year. Talk to us a little bit about what he was like working side by side with this incredible man.
Yeah. Oh, I mean, it was an absolute pleasure to have known him for so long. So we first met in our 20s. So we knew each other very well for a long while. He was always funny to work with. He always had a gag for every occasion. Fiercely bright. So you'd never present an idea to Ian unless it was thoroughly thought through. But very, very helpful, constructive, would always help people, to think about problems and working out solutions. Always great for a list of records, always or music, always great for a list of books. It was fantastic to work with. Wasn't very sporty, Abraham, so he never got involved in any sport. So he used to come with me to the squash club, and there was a bar at the squash club, and he used to sit on a balcony drinking beer doing the Times crossword whilst I was running around the court like an idiot playing squash.
It's incredible, and a fair bit has been talked about his love for beer and curry. What's going
Yeah,
on?
absolutely.
What's the story there?
Oh, insatiable appetite for both of those things. So yeah, you like the good things in life, Ian. So yeah, a lot of our meetings we wouldn't take decisions, but we'd often discuss, business opportunities and issues over beers and curry. But we never took decisions at a restaurant.
That's good.
That would be dangerous.
And what do you think his legacy will be in the industry? How do you think and reflect about sort of the legacy is left behind?
I think the big thing was he and Mike Howard bringing the platform to the UK. Remember, this was back in year 2000. It was launched, and they facilitated advisor being remunerated on a fee basis. So at that time, the vast majority of advisors received commission. And as you know, the Retail Distribution Review forced the change, but that wasn't until 2012. So what Transact did was facilitated the early movers to move to a fee-based system. And I think that will be the big thing.
It is incredible to think that Transact came to the market, 12 years before the FCA forced everyone to go on a fee basis, move away from the commission story. Yeah. That is insane to think about that.
Yeah, they were real. It was real pioneering thinking, and the big challenge in those early days was obviously one of education. Actually explaining to advisors exactly how this new world would operate. When you think back all that time ago, there was fee paying accounts. So you'd have your pension and ISA wrappers, but if you wanted for your ISA, if you didn't want to pay the advisor fees from the ISA, you could pay it from your GIA, and we have fee payment wrappers. When you think that was invented 20 years ago, that was very innovative.
It's incredible. So surely, Transacts is what, 22 years old now, and surely the technology is old. The technology is as old as the company, and advisors might argue, well, is that starting to creak at the seams?
Yeah, not at all. So the technology is released every 4 weeks. So a new version is released every 4 weeks. And therefore, one would struggle to find a line of code that has been there for 20 years. It's just refreshed and refreshed and refreshed all of the time. The developers down in Australia, they're all employees. They're in a subsidiary owned by us. So there's no contractors. And there's a very healthy mixture of experienced guys and girls within the platform space. They've got so much knowledge of the platform world, and but the recruitment is from the 3 universities within Melbourne. And there's a lot of internships, so the 2-way interview, and people join us. We sponsor people that have emigrated to live in Australia. They've chosen to live in Australia. So you've got this lovely combination of experience and young, the smartest graduates that want to join our company. And they think about the change in 3 ways. So there's the everyday keeping the lights on. There's there's always stuff to do. There's always code improvements to be made here and there. There's what we then call the business as usual change. So for us, a new wrapper type comes on like a lifetime ISA. We think of that as a business as usual change. It's no great shakes for us. We can do that. And then there's the bigger change, what we call the framework change. So when we think, well, actually, the suite of licenses or let's take the retirement options close to your heart. You suddenly have got all these options, flexible access drawdown and UFPLS. And there's times when you think, actually, this would be an opportune time to completely replace that database because we think we want to be able to do more things and we want to be able to read it in a different way. So, we have different types of change. And my colleague Bernard in Australia, he often describes it's a bit like a transport network. It's a living thing. You've got new roundabouts being put in, new motorways being put in, you're decommissioning old bits of road or whatever it is. You're putting an airport there. So it's constantly living and changing, is the way they often think about it. So it's not old, it's just constantly refreshed.
You're listening to Retirementals.
So is this the difference in your mind? I've had you say this phrase about Transact being, what was the word? An aggressive insourcer. In other words, you own the technology. Yeah, you own the technology, and the people work, the subsidiary companies in Australia, the subsidiary company in Australia, and the developers out there. Um, but then you have, I'm thinking of all of your big competitors. I cannot think of any. I mean, the next that wouldn't be outsourcing would be True Potential, which has half the AUM of Transact, and then you go all the way down to Permanium at 10 billion versus Transact's 50 before you can find anyone. Everybody else in that sort of, top 10 are all outsourced to somebody else. Is this a weakness or a strength? How do you guys
Oh,
think about that?
we think it's a massive strength. So we're in control of our prioritization of work. We're in control of the cost base. And we can flip direction of things as we want. So let's take something like lifetime ISA. Most platforms don't offer lifetime ISAs, because as a standalone thing, it's probably not that profitable. But we think about it that, well, it's part of it's part of the tools that an advisor needs to be able to do a really good job for Mrs. Miggins. So it's not that difficult. Yes, we've got to comply with some new HMRC APIs. We're really used to doing that. So we'll create the lifetime ISA. So day one that that became a product, we launched because we just moved some resource around to do that. Take some other areas. We get quite a few requests for subscriptions to VCTs, but new VCTs. Not many platforms enable this. We can do that. That's fine. We work with the third parties, so you can subscribe to a new VCT and still get the certificate to get the tax reclaim. So it's up to us to decide. We're not dependent on a third party to build these things for us. If I want to report on offshore funds producing income, I can just specify that report.
You have to acknowledge, and I think you've done this in your communication to advisors, which I read every month when it comes out, and also
Thank you.
in public reports. You have to acknowledge though that service did dip during COVID. There were a fair amount of frustration on advisors' sides about paper filling forms, which was problematic in COVID. What have you done? How have you responded to that? And is that all behind you now?
Yes, we did have servicing issues towards the end of 21 and into 22, and it was one of the most painful periods for me personally and for the business, as we struggle to deliver the service that we want to, and need to. What happened, Abraham, was that in 21 and early 22, we had a 50% increase in inflows,
Wow.
and we had less staff. It's often been dubbed the big quit. During the midst of the pandemic, there was a lot of soul searching, and people, decided they want to go back to university or have a different career direction. So we lost some staff, and it was very difficult to hire during the pandemic and train. And we had 50% more business. So our service fell off, and we vowed we never want that to experience that again. So our staff numbers in client servicing dropped from about 200 to about 175.
Wow.
Since then, we've rebuilt, we've restructured the client services team. We're back up to 237, So we're fully resourced. We completely revamped our training, both the induction and the on-the-job, the crucial on-the-job training. We actually shrunk the number of regional teams because what we found was we never want to fragment the service. So we want the team to be able to deal with pensions, with ISAs, with any fee payment queries, whatever it is. But you can't have every individual to be an absolute expert in everything. So what we introduced was specialists within the teams. So we'll have a transfer specialist within a team, a technical specialist with a team, and that's been really successful for us. So we're fully resourced. We have completely revamped our training. Staff are a lot happier. We changed the remuneration system. We did lots and lots of things. So I've been on a roadshow, hey, Abraham. We've been to Birmingham, Leeds, Gatwick, Durham and Newcastle. And the feedback over the last, well, this year really, but particularly the last 2 months has been really good. So I thank all advisors for their patience over that period, and hopefully we've done you proud by building back better.
I'm not going to give you an easy pass. Tell us what you've done on the paper. The papers were, or the forms, these things are the bane of advisors' life. What have you done on the forms filling?
Yeah. We were always very good for online for what I call advisor consent activity. So where the advisor could instruct us, that was all been online for many years. Right. The bit that we were slow to put online is the client consent forms. So pre-pandemic, that was almost all paper. And pre-pandemic, we didn't get much protestation towards that, to be honest. Right. But the pandemic came along, and as you said rightly, it became very difficult. So we pivoted the resource, and we have embarked upon a digitalization program. So nowadays, you can open a portfolio, a pension, an ISA, all online, and we'll accept, all manner of digital signatures. So we've done the main application forms and the wrapper forms, Abraham, but we haven't done all the other forms yet. So we're working through putting pretty much every form will be able to be done online. So we've not completed that digitalization program for consumer consent forms. What we've also found is we were contemplating making it compulsory that it's online only. And we've had advisors, absolutely said, we want the choice. Right. We want to be able to use paper if the client situation suits that, but we absolutely want to be able to do as much as possible online.
So do you have an ETA? When is it that we can say, I don't know, 95% of client consents on Transact can happen online? I'm putting you on a tough spot, I know.
Yeah, no, I can't give a date because, sometimes there's unknowns, but some of the forms aren't used very often.
Right.
So, it might be a form that's not used that often, pension sharing or whatever it is, on a divorce or something. So there's certain things, because the incidence is very low, there might be quite a tail on this because we'll leave those to the end. The things that are obviously the highest incidence of use, we'll do those first.
Okay. And one other thing I wanted to pick you up on is that I don't know the comparison in the industry. Transact has 50 plus billion. You have 230 people odd in servicing. Is that on the service team? Is that a weakness on the technology? Because what's often said is that, oh, well, you need that many people because the technology is not doing the heavy lifting. If the technology were doing the heavy liftings, then maybe you don't need as many people.
Yeah, certainly as you move more online, you don't need the same number of people for certain things. So simple tasks, you can put all of that online. Where you've got people that want advisors that want a conversation about, if they're using trust, they've got a complicated inheritance tax planning situation, and they perhaps want to put some in trust. They perhaps want to use, let's just say, a DIM for AIM stocks for BPR purposes, etc. And there might be questions around: am I better to put that in a separate GIA with a separate label? So these more complicated things, where it's more of a discussion, and that's the work our staff enjoy, particularly the technical team. They enjoy that. So I think what we'll see, Abraham, is that the people in the client services will not be doing the routine things. They'll be doing the more helpful things. But there are economies of scale for sure. Economies of scale and economies of technology, which is why we continue to reduce prices every year. So that's the journey we're on.
Good. And so one other thing about technology before I move on to other things is talk to us about the rationale. So you obviously bought Time for Advice a couple of years now. I was looking at the report recently. You've basically grown users of Time for Advice, I think by about 50% in that period. What is the rationale for buying this business? And B, what is it that you are building? I believe there's some sort of deep integration going on, and when how far are we from that?
Yeah. So we feel that the advisor needs lots of tools, to do their job. I know lots of them use your tools as well, and they use the Transact platform, and many of them use a back office system. We supply data to over 50 service providers.
Wow.
In the sector, and through APIs. We've been using APIs for over 15 years, to allow people to access the data. And we've all read about, and we all hear from advisors, the inefficiencies from double keying. They're keying things into a back office system and they're keying things into a platform system. And clearly it makes sense to try and reduce it, maybe eliminate certain aspects of that. So we thought, wouldn't it be really good to have a deeper integration with a back office system? But we realised that's quite a lot of work to do that thoroughly and properly, and to ensure that the back office, which isn't regulated, remember, that they're not moving into activity that should be regulated. So, how do you work all of that out? So we thought the best way to do that, as you said, we're compulsive insourcers. So we thought the best way to do that is to acquire a platform, and then we will acquire a back office, and we will work with that back office on those integrations for, application forms, for database records, for advisor fees, whatever it is. But we'll do that in a way that once we're happy that it's working with Time for Advice, we'll make that available to others. So that's the strategy. It's a relatively small operation. They've got about 80 staff, very good development team. And what they've been doing so far, their Curo product, they've been moving that to the Power Platform, which is what they've been doing. And our approach has been, do it well, do it thoroughly before we really scale it. But as you say, we've still increased the license numbers quite significantly over the period.
So the Power Platform is this new thing that has the deep integration between the CRM and the Transact platform.
It will do, yeah.
Correct. And the intention then is for you to use this as a playbook for other non-Transact CRM or
Yes.
tools to have access to
Yes.
that data.
Yes, that's right.
That's interesting. I did not know that.
Yeah, because our advisors, well, as I say, they use well over 50 different systems. So, our view is we think advisors should have choice, and therefore we have to play with a whole array of players out there.
Yeah, it's good that you say that because, I mean, you would always have better integration and better trust between, in this case, your own technologies. But
Yes.
it's good to know, I guess, that you're not using this to cut out competing tools, from the equation. If anything, it'll hopefully strengthen that integration.
Well, yeah, we'll perfect our skills of how to do that. One of the things that we are cautious of is security. So we do, with the people that we supply data to, they complete questionnaires and attestations. Obviously, where you own the back office system, we we can we can insist on the appropriate level of penetration testing and security being in place. If it's a third party, we have to get them to complete questionnaires and complete attestations that they've done all the necessary stuff to protect the advisor's client's data, and Transact client data. So, but that's not a problem. It's all online, and all of these other service providers do complete the necessary online. So it seems to work quite well.
Yeah, I mean, there are industry standard, certification attestations that we can you can
Yes.
say, you need this level to be able to access Transact data. So I don't see that being a problem. No, that's very useful. Thank you. What else? Oh, one other one to put you on the spot. Might we see a world where if I'm a Transact user, I don't have to pay for time for advice or power platform or what you call it? Or is this always going to be kind of separately paid for in your mind?
Yeah, that we see them as separate and separately paid for. I mean, one would have to be careful. There's the inducement rules one has to be careful of as well and aware of. Yeah, there's no plan to say if you use Transact, Curo is free. There's no plan to do that. Sorry.
That is interesting. No, thank you for the clarity. I always wonder about inducement rule, because to my mind, if the tool in question is for the benefit of the client, then and it's needed for the advisor to do their job, then I struggle with how you're
Yes.
going to make the case that it's an inducement rule, I guess, or that is it's caught by inducement rules. But I guess the CRM is slightly different in the sense that there are parts of it that is used for the client. Maybe there is a part of it that is for the advisor's business. I don't know. But yeah, you're right. There's
Yeah.
lack of clarity there.
Yeah. And who knows, in the future, there might be elements that, one could incorporate and say, that is included, but there's other elements that isn't. We've not got that far yet.
The one thing Transacts have always done is to stick to your knitting. I'll come back to this point, but two things I wanted to ask you. One is, why should a new advisor consider Transacts now?
There was some recent research by Platforum, and they asked advisors if you were considering a new platform, who are the platforms you were considered, and Transact was the highest, is the highest to be considered, and I think there's lots of reasons. One is stability. People do appreciate the fact that we're financially stable. There's no debt. That we're proven, because Mrs. Miggins needs to know when she retires that the provider's still going to be there, and it's not been sold on and sold on and sold on. So people like the stability. They really like the breadth of wrappers, so that it is a wide range of wrappers that we provide. I mentioned I've been on this roadshow, and advisors love the fact that we pass on all the cash interest. By the way, particularly at the moment with interest rates being high, that is very popular at the moment. That we don't skim, and we run it as a treasury function, Abraham. So we don't just put it with one bank. That's sort of easy for us. We manage it across 5 banks, all high credit ratings, and it's not all on instant access. Some of it's on 7 days, 14 days, 28 days, and it's managed very actively daily. I'm very passionate about this, but that's another factor. This very good interest rate that we're paying is another factor. And I think the combination of control of technology and human service, that nice combination, people appreciate. We're not direct to consumer, so we're not competing with the IFA in any way. So all of those things we like. We've got over 100 DIMs on the platform now, Abraham. So if an advisor has got such choice to work with whatever DIM they want.
As you opened the door to that cash on platform thing, I want to understand that. I want to go there. Something in your recent update basically blows my mind. It goes along the lines, I quote, the average portfolio on Transact is valued at 235,000 and as 6.5% in cash and earning 4% a year. This equates to a yield of the entire portfolio of 26 basis points, and that's greater than the 24 basis point of revenue yield that Transact earns. End of quotes.
Yes, completely offset. Our charges are offset by the interest payment.
I mean, that blows a bit. And then I contrast that to, this is me doing that, right? No, you, to say AJ Bell, where they make such a big margin on the cash. So if you assume that the cash represent about 6% of their asset, they make 10 basis points on the overall assets just from cash interest. And we've seen the news recently with Nucleus making, I don't know, 26 million was reported in the press. Why is Transact out of step with the rest of your competitors? And I'm playing the devil's advocate, are you being overly, I don't even know the word. Why, you could make more money.
We're doing the right thing,
not?
Abraham. Yeah, we're doing the right thing. We make good margins on our core business, as you know. We're nicely profitable, and our view is this is a return on their investment. It's no different to a dividend or a distribution. It's the interest that they're earning. Sure, I could have put something into the T's and C's, and so we can take a slice of that. We don't think that's the right thing to do. And therefore, we absolutely believe we should pay 100% of that to Mrs. Miggins. And I tell you, advisors love it because they like the integrity of the approach, and the advisors that use us agree that it is the right thing to do. I think with consumer duty, it's clearly in line with the consumer duty principles. And even yesterday, the FCA published something yesterday, by the way, which was a review of if banks and building societies are passing on increases in rates quick enough to customers. So we feel that we're in line with the consumer duty, the direction of travel, and we don't need to skim interest to be profitable. We're profitable anyway. We charge the appropriate amount to do that. So every month at the moment, there's anything between 10 and 14 million pounds being paid to clients every month in interest, and I'm delighted to see it. I approve it every month, and I'm delighted to approve it.
Yeah, and you're obviously doing some work in the treasury management, as you say. So behind the scene,
yes,
you are managing, the liquidity, how much of that should be in instant access, how much of that should be with a particular bank. So you are, in effect, getting the institutional rate for the clients and passing it all on. I assume, of course, you charge the normal fee, platform fee for
We
the
do,
cash.
yes.
Right.
That's exactly right. So the other important thing here is we only select banks that have high credit ratings, so strong credit ratings. And there's currently 5 banks. I'll probably take that to 6. The other thing you do see some players doing is adding some banks which have lower credit ratings in order to get a higher rate. We don't do that. We do ours through, as you said, proper treasury management.
And this thing about money market funds, I know you don't use money market funds in this. Why not? I mean, couldn't that be part of the strategy?
Yes, yeah, it's quite hard to hold money market funds within the cash environment,
Right.
and no one's really found a way to do it that's acceptable to the regulator. But it's a good observation, Abraham. What I have noticed is some advisors are using money market funds themselves. They're just buying whatever money market fund they've selected alongside the cash that we're managing. We also offer term deposits, by the way. But that's separate. So there's banks that offer term deposits on the platform, but that's an advisor and customer selection,
Right.
whereas the pooled cash is us that's managing it.
That's understood. And I want to be respectful, Tiff, of your time. So there's lots I want to ask you, and I know I'm not going to get this opportunity again for God knows how many more years. So I want to use it. A couple of things. So speaking of profitability, so Transact has always been one of the best run company in this space. Last I looked, your profitability is something like 47%,
Yep.
profit before tax, and that's actually declined slightly from last year. I think it was 49. So you're not
Yes.
poor.
No.
And
that's without skimming any interest.
that's without skimming any interest. That's with you doing 1 basis point, is it, every year you've been dropping in fees. So you're sharing the economy of scale. The business is well run. All of these arguments in my mind about, well, could you get more economy of scale, maybe to reduce price? I don't know. But the question I always wonder is when I then compare and contrast that to, say, AJ Bell, slightly less profit margin. I think they're at 40%, and that's an increase from last year, which was 36% profit before tax, and they've gotten a shot in the arm by the interest rate thing. But then I go on the public market, and Transact is valued about 50% less than AJ Bell. What's going on here? Why is the public market penalizing Transact? I don't get it. So you might be able to shed some light.
Well, it's a long-term game, and markets do move around, as you know. So, I mean, AJ Bell is a different business to ours. There's effectively 3 arms to it. They've got the advisor arm, the direct-to-consumer arm, and they've got their own fund management company in there as well. So, effectively, it's those 3 bits that are cemented together. And as you say, they've had the significant shot in the arm of the interest margin. But AJ Bell's that we know the guys. It's a well-run business. They're a good competitor, and we wish them well. And analysts will value business how analysts value it. So when we look at the price earnings ratio and we look at the consensus PE ratios, we're currently for this year, the consensus projection is a PE of about 19.
Right.
So that's still pretty good, a 19 PE. is still very strong in the marketplace, and then there'll be whatever the consensus target price is. So my view is the share price settles where the share price will settle. Might take a few years for people to determine exactly where that price should be.
Yeah, I mean, you're not poor by any means, but you must be feeling poorer compared to the. I mean, I think Transact was something in the region of 1.5 billion. So I might be making in the peak of the.
Yeah, no, we you're right. The share price raced up to almost 600,
Wow!
which was a PE of over 40. You know what it's like, and then people say, then well maybe that's a bit overvalued, and then it comes down, and people might think, that is or isn't the right value. So it'll settle where it settles. Yeah, I mean we don't manage the share price. We
No.
don't do things to try and manage the share price. So we just focus on running the business, delivering the results, as you say. A high 40s margin is pretty good. We have no debt whatsoever. We're not it's one of the issues with if you're reliant on skimming interest. How long are interest rates at this level? So we're not reliant upon that at all.
So as we start to wrap this up, how do you see the market evolving? There is quite a few things happening. There's been a lot of M&A activities, in the last couple of years. That's settled down now, but I'm a little bit disappointed that you didn't buy Nucleus, as many people are. And that's now ended in a different place. Um, so how are you thinking about M&A in this space? How are you thinking about the newer competition, right? So, the fundament of this world. And the other thing is that I say there is something certainly interesting about a sector where three ex-CEOs, by that, I mean David Ferguson, now having a do-over at Circle. Bill Vasiliev is coming back with something with Soderbergh. Yep. I mean, and then my friend eccentric Hugo Thurman is coming. I mean, it's Circle. Yep. Surely these guys feel that their job is not done. You have all this competition on your heels. How do you see the market evolving in the coming years?
Yeah, I think it's really healthy that you've got dynamism in there. I mean, obviously, I know David and Hugo very well, and they're great guys. You can't keep them away from the platform world. They enjoy it too much. So we've all got slightly different propositions. My personal view is on things like, let's take digitalization. Everyone will get there. In slightly different routes and slightly different ways. And I think the advisors will, at the end of the day, it's the advisors that are really deciding what are the winning models, what are the types that they want to work with, and therefore for us, I think we listen to the advisors and deliver what they want. So, and that is service, stability, financial strength, but also you need good online functionality, and you need good people. So I think we will continue to see dynamism in the sector, and different advisors will opt for different propositions that suit them. Some will prefer Model A, some will prefer Model B. Dependent on their own business. So we've got 7,000 advisors use the platform. So obviously we talk to them frequently and understand areas they'd like us to develop, etc. And that's what we do.
And so you're not worried about vertical integrators who are going to buy these businesses and take them away from you?
Well, they fall into two camps. There's consolidators that are friendly to Transact, i.e. we're their chosen platform, and they're great. We love that. We love those guys. And there's others that they're perhaps in a restricted model. They sell their firm to a restricted model, and they're obviously lost to all of us in the independent space. So you've got different types of players. As you probably know, we offer a dating service for buyers and sellers of firms.
Yeah.
We call it our succession planning service, and we partner with
Yes.
Virtus, who lend money to firms. It's been really popular, Abraham. So those guys have done something like 50 deals. Average deal is about £1 million.
Yeah.
So they're helping firms buy other firms. There's a lot of management buyout activity. The younger advisors buying out the retiring advisors, but they're often staying for quite a few years as almost an ambassadorial type role. So
Yeah.
yeah, I mean, I think you've got to be aware of all these developments, haven't you? You've got to be aware of what's happening in the advisor space, what's happening in the platform space, and you need a healthy paranoia to do these jobs.
You do indeed. And yes, we've had Matt Marias, who run Vatters on the podcast, so we've looked at that
Yes.
subject of
Yeah.
MBO for smaller independent firms. One final question before I wrap this up, and I want to. So this question is actually coming from an advisor, Josh Button, and he says, why do Transact not seem to value families? I don't think that's true because you are family linking. But his point is your pricing model welcomes the wealthy generations, but pushes away the accumulating children with the fixed fees on the tax wrappers. A more commercial approach, he says, will be waiving the fixed fee once the family assets exceeds a certain level. What do you say to that?
Yeah, well, pricing's a complex area. Thanks for the question, Josh. It is a complex area. Our family linking is very generous. We have a wide definition of what's in the family. You've got grandparents, parents, children. We cope with separated families, etc. So it's a very generous definition of family, first of all, and then for minors, so under 18, we do waive the wrapper fee on pensions.
Right.
So exactly what Josh is suggesting, we do waive them for juniors on pensions.
Lysers and Dicers, we're gonna do that.
So Lysers are, that's obviously older over 18 before they can have a Lyser. We'll think about it on JICers.
Jonathan, you've been incredibly generous with your time. So thank you and your wisdom. Thank you very much for the time, for coming on the podcast, for the time you spent, for your insights. I have learned loads about Transact and about the wider industry from this conversation. So thank you very much. And we should do this again. Let's put the dates in the diary for 18 months time.
Great.
So then,
No, I've enjoyed it.
Thank you very much.
No, I've enjoyed it. And it was nice to have the opportunity to have the discussion with you and share some of our thinking. Thank you.
Good stuff. Jonathan Gunby, thank you. And goodbye. Well, that's it, ladies and gentlemen. Hope that was useful, and see you next time.
1, 2, 3, 4.
I'll be remiss if I don't thank my incredible team who worked very hard to put this program together. Thank you very much, guys. I'd like to thank our sponsors, Timeline Retirement Planning Software, and PyTech, low-cost flat-fee model portfolio manager. And you, our listeners, thank you for your time. I hope you've had as much fun listening to the program as we have making it. You can find more about the show at retirementals.com. and you can follow me on Twitter. My handle is Abraham on Money. Until next time, thank you.